Hey everyone, so it's been a while. Today I want to share with you a market outlook for 2026. So as you know, you have some portfolio investor with us and you're always wondering how the market will perform for the following year, whether it'll be good or bad. If good, you want to top up more. Not so good, maybe you want to pull back some money. The truth is we don't really know what will happen. This is a rough guideline what we think will play out in 2026. So one of the first things to share is if you're going on holiday, where's the first place you have in mind? Everyone will think of Japan, right? Now that China banned their tourists from going, we are so happy to go Japan. Yeah, me too. So Japan has actually picked up from the deflation that it's been facing in the 1990s. So in the last 4 years, with the exception of 2024, every year the inflation figure for Japan is up. So if you have friends in Japan or you've been going to Japan regularly, you'll start to notice that the cost of spending in Japan has gone up.
No. Wait.
We are safeguarded from it because the Sing dollar is still strong.
Spicy meat. Yeah, boy.
So moving on into 2026, right? Because the inflation figure has picked up, there is a high likelihood that Japan will actually want to raise the interest rates. And what this would mean for global investors is that for people who borrowed in Japanese yen because it's cheap, Japanese yen and Swiss franc are the two cheap ones currently, the currencies that offer the lowest financing rates. So most people will borrow in this currency and invest in other currencies with higher rates of potential return, as like US, etc. So with the increase of the rates for Japanese yen, what we expect will happen, right, is that people will be forced to liquidate their position to pay down their debts. Then this would cause some pullback in the stock market. The increase in the Japanese yen is expected to happen maybe around the second half of 2026. So moving on, the next thing to talk about will be the increase in food prices. So post-COVID, you'll probably have noticed that your purchasing power might have gone down. The same $50 might have bought more things in the past than today. One of the key reasons would have been the war in Ukraine. War in Ukraine has caused the price of food to go up in relation to some fertilizers. So this has caused the production cost for food to go up. Next, we are seeing more extreme weather patterns, extreme long droughts and flooding in certain parts of the world. Overall, this brought a reduction in the food production. This is expected to continue to play out in 2026, probably hitting the peak around the summer of 2026. So food prices expected to go up and this will cause inflation to be higher. The third point to mention will be energy price has been kept stable for a while, but with the introduction of ChatGPT and all your LLM models, this requires huge computing power and of course electricity. Currently, the electric grid, right, is already running on maximum capacity. So even if you have cheaper oil, it doesn't change the fact that the production for electricity might not meet the demand. Currently, governments around the world are looking to increase the electric grid. So if there's any delay, we expect electric and energy prices to go up. Then this will be another strain on inflation. So summarizing the 3 points I just shared with you: increase in interest rate for Japanese yen, increase in energy prices, increase in food prices. If all three were to happen, I would expect a very strong pullback in the markets because inflation figures have an impact on government interest rates and people's ability to spend money. And adjustment in interest rate for Japan will cause people to panic sell. If just one of this happen, you'll see some minor pullback. If two happen, it should be a pretty large pullback. If three happen, I think it will be quite catastrophic for the markets, for our investors. So for your portfolio, happy to share that because we have this in mind, we have an allocation to shield you in the event of this happening. What this would mean is that if the market continue to go up, we might lose out on some gains. If it does play out according to what we think it would, you'll be shielded from the adverse impacts. So with that in mind, I'd like to conclude our outlook for 2026 and take note that this is not financial advice, this is merely my outlook. Please do your own due diligence if you are investing in the market and you want to take advantage of what I have just shared.